Let's shift focus now and take a look at money matters. The rand is seemingly firmer so far today as investors await President Cyril Ramaphosa's State of the Nation address, which could offer some solutions to ease the worsening power crisis. Investors have so far been demanding some leadership, guidance and clarity on steps being taken to extricate South Africa from its electricity generation crisis. Roy Mutooni is Sanlam Investments analyst, and he joins us now for the latest market moves. Hello to you, Roy. So the rand seems to be firming somewhat against the US dollar after plunging in the previous session. What's influencing trade?
Hi, thanks for having me. It just seems to me like it's more around the gyrations on the dollar itself rather than the rand. We have seen local matters influencing the rand's direction over the past couple of weeks. But since Friday, since we had that non-farm payrolls number, it's been more a dollar situation. First, the dollar weakened, then the dollar strengthened. Now we're seeing it a little bit weaker. And I think that's just providing a little bit of an underpin to where the rand is. So let's see if SONA does actually influence the direction or the standing of the rand.
And let's expand rather on that, because investors are waiting to hear from the president in terms of policy and objectives and plans for the year. What do ratings agencies need to hear to believe that South Africa's economic recovery is on the cards?
Look, I think the biggest problem here is that the SONA has always delivered so eloquently with such pomp and glamour and provides such hope. But then implementation after that tends to be next to nowhere, or actually relative to the delivery, very disappointing. And I think whether it's rating agencies, investors, the man in the street, you and I, all you really want to see is a strong sense of leadership, a strong sense of accountability and a plan. If there is any of those, then I think we will come out as winners here. You can well imagine the skepticism, because we've gone through quite a few of these and seen very little come out of it. But this is a very difficult juncture. We're all feeling the impacts of slow economic growth, infrastructure deficits and all of that. And I think that's all we're expecting, for the president to be candid, take us into his confidence, and come out with a plan that starts being implemented as soon as possible, that we can see the impacts of.
I can safely assume, Roy, that background is not for effect. You're sitting in the dark because you are being load shed. So to your point, we do need to hear about action. So Stats SA has published the latest mining, production and sales data. How are we looking? And what clues does this data give us about the health of the sector?
So it's very consistent with everything else that we've seen. So from a mining production perspective, mining production was down just under 4% for over December. And for the year, it was also down. And that's across the board. PGMs were down, and chrome was down as well. Diamonds were also down. I think those are the biggest in terms of production. From a sales perspective, PGMs were well down. And from a sales perspective as well, we only grew in low single digits. Last year we grew in double digits. The year before we grew in double digits. So I think what it's telling you is that we're selling less and less to the rest of the world, and prices are coming off as well. So we're getting less and less revenue, and this has significant implications for the trade balance and ultimately where the rand lies. And as you can well imagine, production is a function of labor, electricity, infrastructure, ports, and everything. So all of this just ties in, and it's been a trend line over the past 3 or 4 years that it's harder and harder despite the higher prices. I think what has masked everything has been the higher prices that we've got over the past couple of years. This year, we're going to see the impact of lower volumes.
Okay, let's take a look at news from Spur Corporation. They've published a sales update and trading statement. Talk us through their performance.
Really good news out of this one. We expected to see positive numbers, but the base was already quite demanding. But they actually beat that as well. We saw very good sales out of Spur, Panarottis, John Dory's, and even Rokomamas, on top of a very successful previous period, and also on top of a very successful January to June. They're forecasting the headline earnings per share to be up over 200%. And look, that's good news. If you're looking for good news, that means people are still going out, people are eating out. And I think most of all, it probably means that a lot of their restaurants have backup power and have been able to supply to people when during load shedding and times like that. but a very good result.
Sure. Okay, British American Tobacco, is it much of the same or not? I mean, they made it known earlier this year that they will be shedding some jobs. They released their results for the year ending 31 December 2022. How did they fare?
So I think it was a relatively good result. It was probably marginally ahead of where the market and analysts were expecting. But I think the one thing that's made it sell off a little bit was the fact that they decided to discontinue their share buyback because of looming regulatory and macro concerns. And I think that put the market a little bit on the back foot. But by and large, I think solid result. They're still trading on a 9% dividend yield, which is as good as it gets, I think, in this current environment.
Thank you very much to Roy Mutooni for that update.